Hey, what's up, my people? How are you, everybody over there? All right, welcome again into my channel, Gatos FX. Um, Today, as usual, I am extremely humbled and profound honored uh, with this pair, which I just swing with this trade for about 16 days. It is gold euro. This is one of the very volatile pairs, just like gold dollar, the same to gold euro. Very few people trade gold euro, but I would advise you to just look at the pattern with gold euro because it's one of the pair which really respects market structure. It has a higher volatility. The reward is very much good. By then, I've had a chance to hold this pair about 16 days, and it has given me 500 pips in reward. Right now, it doesn't necessarily mean your strategy has to only work for the currencies. If you have a super strategy that align with the market structure, it will be convenient and beneficial for both kind of financial markets, whether you're trading the stock, whether you're trading the future, indices, currencies, commodities, or metals, even the cryptocurrencies. Although I'm highly focused with currencies, but I take very caution with metals. I do trade metals. I also do trade cryptocurrencies, basically Bitcoin. I do love Bitcoin. Gold dollar, gold euro, palladium, platinums, and sometimes bonds. I do trade bonds. So, guys, the market structure has a language which is speak by itself, right? Now, to cut the story short, let's get back to the chart and see exactly how I was able to spot and trade this Goldie Euro pair with a reward of about 500 pips, right? So I don't want to disturb my origin chart. Let's change the broker and see how things were, right? Now, as usual, always rely on the higher time frame in order to have to understand what the market is doing right now. When you look at this pair from the highly market perspective, you see this pair is strongly bullish since 2008. The market is breaking structure above. Market is breaking structure above, and under these circumstances, I could even literally use wicks as a breaker for structure. As I say, there are times we can use body to justify breaker for structure and the change of trends, but there are times we can even use wicks, right? So we are having these highs of the monthly time frame here on top and even these lows here on bottom. So anything necessarily to say that this market has in a major structure changed its direction is only and only if we have at least a monthly or weekly candle that will close below this monthly invalidation point. However, so far, if that doesn't happen, that means we are still having a bullish direction while market is making a higher time frame retracement. For any sales will just be concluded like that. So eventually we can study the behaviors of the candlestick. Like I say, normally we don't trade based on the candlestick, but we use the candlestick, especially of the higher time frame, to align with the trading logic of the market. You understand? These higher time frame candlestick, they give us the information like what do the logic tells us about. Like you see, this retracement which was done on November last year, actually price came to liquidate at this monthly time frame flip. This is a monthly time frame flip, which was tested by the November's candlestick, right? You see, we have this all the high thrust up, thrust down, market went up, and then market came back to the test here. So this is a very good significance point telling that now the seller's power have been exhausted. The seller's power has been exhausted, and buyers are ready to push the market above to the agenda. Like you see, this candlestick, the whole month of November last year, this is some kind of a pin bar. This is a shooting star, like tells us that the seller's power has been exhausted and the buyers have taken over the control of the market. And it was followed by the December's candle last year, which was a super doji. It's an indecision candle. Like since this area, the price is under the area where there is a resistance. That's why you find out you have this indecision candle, you have this shooting star or a pin bar. All of them giving us the confidence that the market now is literally about to go long, right? Then if we move to the next lower time frame, which is a weekly time frame, we see this price, yes, it came to the test here at the monthly time frame flip, which was a very super sniper entry. I wasn't there, I didn't take this opportunity. But then now look at what the message we get from the market at the mean current time. The market is still maintaining bullish structure. As you observe from the market trend, you see here we have highs and lows, higher high, higher low, higher high, higher low. So we have had a high and then market came to get a lower high. Perhaps the market is still continue to go long. Again, we can look at the pattern of the next lower time frame, which is the daily time frame, which gives us like a confirmation why this price came to retest under these areas, what was the literally main conference that this price came to take upon. Like if you see and you observe very clearly, you may find out that we have added certain features of a scenario zone for this daily time frame, whereby price again came to the test at this outside formation. Once the price was selling, it was making a lower low, lower high, lower low, and eventually we have had a high high. So there was a daily time frame DC around this area, which is a bullish DC, with a formulation of this inside formation in which price came to the test through that pin bar of the November 2023. So this was the whole month of November last year, which created a pin bar monthly candlestick. It came to the test at a daily time frame inside formation, which was located within daily time frame as another zone. So you can see literally like how these conferences do align with each other, one another. When you take a trade, you must first rely with a higher time frame order flow. How many higher time frames literally are going in sync? That's a very important point. And number two, you need to distinguish and be reliable with the area of interest with relation to the point of interest. The area of interest is perhaps a zone whereby a multiple of confluences are located within a specific area that are giving you the confluences and the signal for the market to either have a reversal or continuation or change of direction. So that is number one, right? So under this circumstance, literally everything was impossible to tell her that now, yes, the market was good to buy this area. And you could perhaps ask yourselves, like, what sort of liquidity the price literally was looking upon and took this long trade. Of course, this price bought at this area based on the failed daily time frame WRL liquidity. If this price was about to sell, actually we have had these weak rejections, which perhaps could have just supported the market to go short. But then since this candlestick of 27 November last year closed above and gave us the direction change of the daily time frame, perhaps we would have expected that the price will come to test again at the same zone, which have had a formal WRL failed liquidity of the daily time frame. So things were aligned and things were going smoothly like this. So that's the point number one. And number two, why this price was selling up to this DS Nara zone and DWRL failed liquidity engineering, price have just left another price has failed to close over and above these highs, of the day time frame structure, which were giving this sales retracement, right? Because this only day time frame was selling while his brother's time frames were all buying. The monthly time frame was buying, and the weekly time frame was buying. So these sales of the day time frame was just a maneuver for the retracement of the higher time frame. So we expect that this power, which was injected here, the buyer's liquidity, which was injected here at the DSNR zone, wasn't enough to close above and break these highs of the day time frame bearish structure. So we needed to add some more liquidity in order to surpass these formal daily time frame highs of the structure. That's why the only liquidity which I was looking upon was this hidden DCC, which was located around this area. So this was a very good potential area to expect that we have a retracement. Perhaps look here, you should be very much careful when you look upon the things. This candle of 8 January this year was literally nearly hitting this hidden DCC, but it didn't touch it. And still, we expect the injection of liquidity from this area perhaps could have just pushed the market above. So I was looking for a second test, something which was very much supported, by the uh, by the presence of this candle of 9 January. This is a inverted hammer, which is a sign of reversal, also telling us that now, all right, the buyer's power has been exhausted, so we need to have a little bit sales in order to have a push up above. But while I was looking for these highs of the D time frame, as well as the former highs of the D time frame structure as a TP1, but thinks this market is a bullish agenda to continue to go long. The TP that I would have just considered to be a TP2 was this D time frame LQE liquidity, whereby if this candle closes above, I'll just look upon to continue to surpass this, to hold this trade up to the point there above, right? So now let's just play the price and see how all of the things went into uh, our favor as we were anticipating. Look at the price. It just only took 2 days for the price to come and retest. Of course, if you are not resilient, once the price is doing retracement, perhaps you could have just closed your trade. But once you understand the higher time frame momentum and direction, you become resilient to hold this pair up to the point where we anticipate the price to go. But for the sake of pips for risk to reward, I only use the 40 pips for the highly volatile pair like this. And after all, this pair was structured from the day time frame, which is a very higher time frame. So it is what it is. So this was the first opportunity. There was another second opportunity which I literally didn't take, but while I was doing a back testing, I saw that opportunity through 4 hours time frame. There was an opportunity to enter again once this price take a liquidation of the first trade and the price started to go long. We have had a H4 DC around this area, and we know once we have a DC, we expect the price to retest again here down. There was this H4 LQE liquidity. Perhaps we could have just be able to take the second opportunity, but I didn't take that one. I still held the first opportunity up to the point where this trade went into the take profit target, right? So guys, this is Gatos FX. Perhaps you could see this pair in my Instagram page for all my followers. Make sure you put a comment, you subscribe into my YouTube channel, Gatos FX. If you want to learn more from me, you can just DM me directly for more mentorship, right? Thank you for watching and listening. Until next time, see you. Bye bye. Ciao.